Welcome to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the world. In this edition, New Zealand's biggest company hikes its forecast payout by 20 cents a kilogram milk solids thanks to a recovery in global dairy prices in the past couple of months. Landcorp is in talks to run the Crafer farms, and credit ratings agency Moody's is unhappy with the European Union's debt woes, vowing to review all 27 EU countries in the new year. Ho, ho, ho! Joining me now to tell us more about the movements in the markets is ASB rural economist James Shortall. James, welcome.
Always good to be here.
To the final show of the season, and we're still talking about what's going on or isn't going on in Europe.
Yeah, it continues, and I mean, I don't think that many of these leaders are going to have a very, very good Christmas.
Yeah, no Merry Christmas there, that's for sure.
Yeah, definitely. So, I mean, these issues continue to go on, and I think the real issue is that they haven't quite got it yet, and the market is still concerned about where this is going and exactly whether it's going to be solved. So initially we did see markets lift after the news that the summit had gone reasonably well, but then all of a sudden over the past day we've had some of the credit rating agencies come out and say, hey guys, you still haven't quite got it, we're going to review you next year. That's sort of put a warning shot across everyone, and that's concerning.
James, at the weekend summit that we've just seen come and go, 26 out of the 27 EU nations agreed that they would put tougher sanctions in place for all of the countries looking for bailouts, except for Britain. Britain's pulled the pin and said, I ain't going to do it. Now they're way out in a limb. What's your take on that?
Yeah, well, it's concerning, and it's also seen that we've also seen a bit of support, you know, disenfranchised, I suppose, from Mr. Cameron in the UK based on that decision. So he's sort of out on a limb for sure. They are part of the EU, but I guess the question mark is, you know, where they're going to sit going forward and whether they really want to be part of this bailout package. And to be honest, Europe really needs everyone to be involved and to be a consolidated sort of focus on where they are going to go forward.
Where can Britain go with this stance?
Well, I guess they have to continue to look at what some of the important parts of their economy are, and that is the financial part. David Cameron has been talking about that. It's not going to be, you know, he's not doing this because he wants to control the London bankers, as we call it. But you'd have to say that there could be some jiggery pokery going on there, wanting to protect some of the key parts of the UK economy, but also trying to keep them away from some of the issues that are going to be going on in Europe. So there is some good thoughts, I guess, in what he's thinking, but really for the good of all of Europe, they do need to have a consolidated picture from everyone. But
are we seeing now that it's all becoming much more about politics rather than good old-fashioned economics and finance?
Well, for sure. I mean, we've seen some of the financial leaders now become prime ministers of some of these countries. We've seen you know, 4 or 5, 6 countries change in terms of their governments over the past 2 months. There's, you know, it's definitely becoming quite intertwined and murky as to what's going on here. But you know, the politics, and we talked about this last week, some of the credit rating agencies are really having a bearing on some of the decisions that they're making, and that's not right. I mean, we should be seeing the politicians be doing the right things for the countries and the right things for their economies.
Yeah, okay, let's talk about global agricultural commodities now. They've had a pretty rough week. What's the latest?
Yeah, well, last week the US Department of Agriculture released their latest supply and demand estimates. So they do this every month, and what they really said was that it's pretty bearish for, and that's gloomy for what's happening, especially for crop markets out of the US. And we've seen crop markets really tank, fall significantly towards the end of last week. They're actually picking that we're going to see higher production out of some of the key areas, particularly for wheat. And we're also going to see slightly lower demand, so we're not going to consume as much. And the real risk, I think, for us here at home is that it's going to have an impact on livestock production around the world. Of course, if grains are cheaper, then livestock can eat more at a more effective price. That might mean that production would lift. And
we're certainly seeing that corn and wheat prices are tumbling down.
Yeah, the corn and wheat prices fell sort of 6, 7, 8% last week, and just looking over the last 6 months, they sort of peaked in March, April of this year, and they've fallen probably 25 to 30% since then.
Wow, and cotton prices also continue to tumble. I mean, this has been a year of incredible highs and yet now incredible lows.
Yeah, that's right. I mean, cotton prices were up around 225 US cents per pound. This is in March. Extremely high. I think everyone at that point in time did say, while these are probably at uncomfortable levels, They've since fallen significantly. Now they're around 90 cents. So that's a huge fall, and it does come back to higher supplies, and still demand has weakened off. We've talked about the likes of Gap. They've found it pretty difficult to sell T-shirts and that sort of thing into a market where people are struggling with their own finances, and they're also dealing with higher cotton prices. So we're starting to see those things come through a little bit.
U.S. beef prices have lifted again.
Yeah, US, it's an interesting one, and beef prices have lifted over the past week, but some of the signals that I've been seeing out of that particular market, which is important to us here at home in New Zealand, has been that demand hasn't been quite as strong. So after the Thanksgiving break, everyone's been eating their turkeys, that sort of thing. They start to go into beef and looking at some other meats. Many were expecting demand to be really strong, and it hasn't quite been the case.
Now, and this has been going on despite dairy prices holding pretty well.
Yeah, well, we saw last week global dairy trade just lifted once again, and we've seen so much turmoil around the world over the past 6 to 8 months. And yes, we have seen dairy prices fall. They did fall sort of around that 15, 20, 25% in some cases, but just lately, when a lot of things have been happening in Europe, then dairy prices have actually stabilised and in a lot of cases lifted.
Now, the New Zealand dollar has been trading pretty much sideways this past week. We don't really know where we're going, do we, anymore?
Well, we think that the Kiwi dollar is probably going to sit around these sort of similar levels. We're currently trading just on 76 cents against the US dollar. So we nudged up a little bit to 78, and then when these things in Europe started happening, we've pulled back a little bit. To be honest, we really think that given what's happening around the world, we're going to trade between that 75 and 78 cent mark against the US, probably over the next few months at least.
Thank you, James. Coming up after the break, sign of the times. There are no sacred cows at Air New Zealand, according to the company boss, as the nation's airline considers axing hundreds of jobs in the new year. Forget Minister of Agriculture. It's now the Minister of Primary Industries. What's it all mean for farmers? And the world's growing population needs more food, more fuel, and more bandwidth. Just for fun, we pick a few stocks you might need to cash in on the feeding frenzy. But first, answer this in our Farmers' Facts and Figures quiz. New Zealand food prices flatlined in November, rising just 0.2%. The 4% drop in fruit and veggies hit hard. Question: what percentage did prices fall for lettuce, tomatoes, and strawberries? The answer when we return. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, what percentage did prices fall for lettuce, tomatoes, and strawberries in November? Lettuce was down 33%, tomatoes 23%, and strawberries fell 37%. But overall for the past year, food prices are up 1.9%, compared with 1.1% for the year to October. Now, according to New Zealand economists, the latest Eurozone deal isn't enough to stabilize markets or to solve Europe's economic crisis. Joining us now is Senior Financial Advisor for Spicer's, Jeff Matthews. Jeff, welcome.
Hi, Genevieve.
Jeff, from what you've been following, what's your take on what's happening over there?
2 steps forward and 1 backwards. 26 of the 27 countries have agreed to change the constitution to allow greater, control of the economies. But Britain's the odd one out. Didn't want to go there.
Is that because Britain didn't want anybody coming in looking at how they're running their economy?
I'm not sure of the details, but they, London has been a main finance centre, and they really don't want to come under the jurisdiction of Brussels and a whole lot of middle management. So they opted out of that clause. But someone asked me the other day, should Greece just have left a year and a half ago, and maybe they should have done. The biggest problem with the European situation is it's all about politics. If you look at the US when they had the same problem in 2008, with a Federal Reserve and a Treasury, they were able to get together. They basically forced $750 billion onto the various banks, irrespective if they needed it, and within 18 months most of that money was repaid and the banking system in the States was fixed. Here we are 21 months on from when Greece first became a problem, and we're still tinkering around the edges with coming up with designs. What's happened recently is that the European Banking Authority has now said that the European banks need $115 billion 115 billion euros of extra capital. And they're in this vicious circle. Sitting in your investment portfolio are Greek bonds or Italian bonds, and as they keep falling, you have to write them down to market value, and then you're short of capital. I mean, so it's a vicious circle for the banks. And now they're forced, to sell off assets.
Let's go now over to the United States. It's looking a little bit better than Europe from your point of view. Although the jobless rate is still pretty shocking.
Even this morning, Ben Bernanke from the Federal Reserve was, moderately happy with where the economy is at. We saw some improved unemployment numbers last week. Consumer confidence is the best it's been in the last 6 months. People have been repaying debt for the last couple of years, and we saw, an increase in car sales back in November, which we haven't seen for, at least 2 years, that level of new sales. Part of that is cars are getting old. I mean, people haven't replaced cars, they haven't replaced trucks. And at some point in the economic cycle, they have to be replaced. So we're at that cycle now with, certainly the trucking fleet in the States is the oldest it's been since 1979.
Some of the car companies have done very well at taking government bailouts, if you like, and paying it back. Shouldn't they be the guys perhaps now running the American administration?
Well, Ford has paid back $21 billion worth of debt in the last couple of years, and they were the only one of the three companies that didn't apply for bailout money. So maybe the head of Ford, should go and help run the economy. It's
interesting that we go back 3 or 4 years ago, and all those guys were pulled into Washington
to by private jet,
get the telling off and get told how they're going to run their businesses, and they've gone back and they've run them pretty well.
Yeah.
And the government's on the other foot.
Yeah. Let's talk about where perhaps now here in New Zealand, those of us who have a little spare money, and I'm not saying I do, where should we be putting our money in stocks? Jeff, there are some interesting trends in different sectors around the world. One of them, of course, is the emerging markets with their incredible demand for power.
Yep. I mean, if you looked at markets right now, you'd say the US is pretty attractive still, and emerging markets are still attractive. Those are the places that people should have some of their money. And you saw that story about potash in Canada. You can see why BHP Billiton wanted to buy that business, late last year, earlier this year.
And were smartly turned away by the Canadians.
Well, it's double standard.
Yeah, that's right. They want to buy overseas, but they don't want foreigners in their country.
It's just like us. We're the same, aren't we?
Yeah. But fertilizers could be a really great stock to watch. Would you agree, James?
Well, we all agree that the people are going to want more food.
Yep.
There's going to be emerging middle class in developing Asia, all these great stories, and it's all these things that are going to help the New Zealand economy long term around food. Then it's the same reason that everyone's going to want fertiliser to grow more food. So certainly fertiliser's going to be an important one going forward, probably not the next 5, but the next 10 or 20 years going forward. So it's a good industry to be in.
And think about it, potash is only produced in 12 countries in the world. Now, that's pretty select market.
Oh, definitely, and it's huge capital costs. It's not, you and I can't go in there and start up our own potash sort of industry. So pretty select, and there's not too many that can do it well.
And let's look also at stocks that might be involved in things like providing resources for China, steel, oil. Your thoughts, Jeff?
All of the above. I mean, that's what continues to power the Australian economy is China's appetite for raw materials. I mean, and it's interesting now that they're starting to kind of lease or buy land in Africa. A number of countries are doing that to increase farm production. So yeah, interesting times we live in.
What do you think about gold mines? We've seen the price of gold rise and rise and rise and rise and rise. Would you be putting your money into gold mines around the world?
Well, I guess I would if I had faith in where gold price is going. I'm a little bit, question marks around that. I mean,
why?
Gold's always been, when you're risk averse and you go and look at gold, and maybe you go and look at US Treasuries. So, of course, in an environment where we're in right now, then gold's looking pretty attractive. But, at some point that's got to change. I'm not picking that we're going to see a huge slide in gold prices, and to be honest, I've probably been proved wrong over the past 6 months with where gold's been going. But
don't give up your day job.
But certainly, if you believe in gold, then gold miners have got to be a pretty good investment.
Talking about gold, what about white gold? I see here at home, Fonterra has boosted its payout forecast once again. What's behind that?
Well, they're saying that we've seen stabilisation in commodity markets. So we've seen, dairy commodities lift at each of the last two global dairy trade auctions. But you'd have to say that I think it's mainly currency driven, because the currency from the last time they made their announcement, it's trading around 85, 88 cents. Now all of a sudden we've spent some time below 75, and the outlook's changed quite markedly just over the past couple of months. So that's made a huge improvement and a lot more comfort. I wouldn't say for any stretch of the imagination that we're not going to see further changes. It could be up or down through the season.
Official cash rate now?
2.5.
Yeah, and are you picking any changes?
James is probably better, but I think most people have moved out from June into September, and some are saying December this time next year.
Wow, that far away. What do you think, James?
Yeah, I mean, saying basically it's going to be 12 months. We're going to be at 2.5% really, and to be honest, there's been a lot of predictions made over the last, say, 6 months, and we're going to see an increase even at the end of this year, and that's been moved out to the beginning of next year. Middle next year, late next year. So there's every chance that, depending if we don't see some resolution out of Europe, then those that could be even further out. So I think no change to the official cash rate, low interest rate environment coming up.
And the US is saying that rates are going to stay down at kind of 0 to 1/4 until mid 2013. So
it's a long way away.
It's a long way away.
I'll tell you something else that seems to be a long way away. Who is going to actually be able to buy the Crayford farms that have been on the market for a long time now? It's been 9 months with the Overseas Investment Office, still no decision. And apparently Landcorp says if it is given to the Chinese company Shanghai Bangjin, they may be involved in helping to run the businesses. Would that be good for New Zealand, James?
Well, it's potentially the best of, an uncomfortable position, I guess, if that's the right way to put it, because obviously if Chinese interests buy the land, New Zealand interests can still generate income, still have some control over how those assets are run, and still get the milk, I guess, through Fonterra. So there is some benefits out of that. But at the same time, it's not an ideal situation, in my opinion, to be seeing some of those assets going offshore.
It's been 9 months, as I say. You could have had a baby by now, for goodness sake. When are they going to make the decision? What's holding them up?
Well, I got no idea.
What, about having baby, or when they're going to make the decision?
Well, I know it takes longer than 9 months if you're an elephant. But
and your point is?
This is an elephant.
Yeah, but it's a big decision. It's a political decision. Ultimately, the government makes a decision. Isn't it time for them to be men, stand up and be counted, and make the call?
Yeah, move on. I mean, yeah, I just think that's, get over it.
I guess you just wouldn't want them to be making any decision based on this, because Landcorp potentially may be involved. So there is some...
They're conflicted.
There is some issues around that, I think, and potentially also for New Zealand, the IIO to be making those decisions based on the fact that Landcorp will be involved. It needs to be made on the fact that the Chinese interests are going to buy these, manage them, own them forever.
Okay, gentlemen, thank you very much. We'll come back and talk about Air New Zealand. They're talking about axing hundreds of jobs in the new year. Should other companies be worried? More on that soon. Coming up after the break, Future Proof on the highways and byways of the economic world. Get on board as our experts take us along for the ride and point out what they'll be watching for in the coming year. Meantime, the South Island dairy herd is growing faster than the North Island one. We've now got 4.5 million cows all up. And last season was a record year for the average production of each cow, up 5%. So answer this in our Farmers Facts and Figures quiz. How many kilograms of milk solids did each cow produce? The answer when we return. Welcome back to Money Talks. Just before the break, we asked you how many kilograms of milk solids did each New Zealand cow produce last year? 334. And yes, the Waikato region continues to be the largest source of dairy cows, with just over 25% of all the cows in New Zealand. Now it's time for Future Proof. What will you be watching in the coming year, James? And what are the trends that you're going to be looking out for?
Well, I think a continuation of what we've been seeing through this year, and that's been strong food prices in general and strong commodity prices in New Zealand. I think that will continue, but I think the one thing that farmers really have to watch is that what's happening out of Europe, because that's a ticking time bomb, and if we don't start to see some resolution, that could have some effects on China and some of our markets, especially for our commodity products.
And which sector of the agricultural markets are you thinking of particularly when you think of New Zealand?
Well, I think dairy, of course, we're exposed to China, but you know that will really come down to the fact of whether China gets impacted by what's happening out of Europe. And right now, that's probably not a core view. So you know there's some good news there. We're going to continue to benefit out of that, but it's just really whether we really do start to see some issues unfold. The key question, I suppose, will be out of particularly maybe lamb markets, for wool markets, out of those developed countries where we are quite exposed into the European nations. If we start to see a really big slowdown there, then that could have an impact on those commodity markets and for products back here at home.
So farmers are going to be a little nervous going into the new year. I tell you who else is going to be nervous. Anybody working for Air New Zealand. Jeff, I know that airlines around the world are facing tough times, but Air New Zealand now is saying that they're looking at axing hundreds of jobs in the new year. They're just not making money.
Well, I know, having come back from Tokyo a couple of months ago, that plane was probably only 40% full, and that was partly the slower economic growth and also what's happened in Japan. There aren't as many people travelling, and yet at some point you have to start saying, well, how long can we keep losing money on this particular route?
Yeah, particularly when you think that 74% of it is owned by the government. That's us, the taxpayers.
Exactly. Well, but airlines are a terrible business. I mean, there are very few that actually make a profit over a long period of time.
If it's such a crummy business, how come they're in it?
Well, they bailed Air New Zealand out. Was it about 8 or 9 years ago? As a private investor, I wouldn't want to own shares in an airline. I mean, that's my personal view.
Yeah.
You've got labour costs for staff. You've got fuel costs, which can fluctuate enormously, and there's a competitive market. They just drive the price of seats down. I mean, you compare with what you fly for now with what you may have paid for a fare 10 years ago. I mean, they're cheaper now than they were 10 years ago.
Yeah, but still not that cheap in many instances. And apparently on its long haul, Air New Zealand is losing $1 million a week.
So I see, but they're not alone. Qantas was losing large amounts of money too. So.
And in New Zealand are putting some money into investing into their national fleet and adding planes into some of the domestic routes, because that's what they are making money out of. So I guess it's a little bit of a change around in what they're thinking about to make sure they are making money. And we have to remember that they have been making some money. So they've been, of the airlines around the world,
exactly. They've been one of the better run ones. Yeah. And I mean, one of their problems is some of the routes that they want to go to, perhaps like South America or flying into the kind of mid-US, were dependent on getting the Dreamliner, the new Boeing plane, and that's been delayed until about 2013 before Air New Zealand. So there are routes that they wanted to expand into, but they don't have the planes currently, and they're still flying old 747s. So.
What do you think our viewers should be watching out for now in 2012, Jeff? What's your best advice moving forward?
Well, I mean, in the last 12 months, being in cash hasn't been a bad place to be. But if you're going to be a long-term investor, you can't stay in cash forever. I mean, even at the bank at the moment, if you were getting kind of 4.3, 4.4, take off tax, take off inflation, really you're earning zero. So yes, you can sit like that for a year or two, but longer term, you need to have money invested in other kind of assets. So now's not a bad time to be dipping your toe and buying into either local share market or overseas investments.
Let's talk locally. Smart money. Where are you picking?
Well, I tend to go offshore because it's a market that I know better. I tend not to look at the local market that much because it's so small. I just think there's better opportunities. If you look kind of globally, and okay, I've got an interest in one of the banks in the US, but most of the banks are off 45 to 50% this year, and they actually don't have a banking crisis in the States. It's just everything, because of what's happening in Europe, all the banks are, out of favour. Some of the German banks are off 50, 60% this year. Now, they're not going to go under, so at some point they become a screaming buy. Well, the banking sector generally interests me, and I look at it again in 2 years' time, and I'm pretty sure I'll make money.
I think in general, if you look at the farming community here, then yes, there are some risks going into next year. If we look back 12 months ago, then we were in a completely different situation, and it's been a pretty average year for a lot of the global players out there. But agriculture in general has done extremely well. It's probably been some of the best year that we've had ever across the board, and there's every indication that it's going to be continuing to be a strong year. So we've got low interest rates, a lot of farmers deciding to repay debt. I think that's a great option right now.
Thanks to my guest, Jeff Matthews, Senior Financial Advisor with Spicers, and ASB Rural Economist James Shortall. Be sure to check out the website for all kinds of great programming this holiday season. Meantime, with Christmas just around the corner, remember what one wise man once said: Santa Claus has the right idea. Visit people once a year. Here's a musical salute to the Santa season, just for you.
Oh, jingle bells, jingle bells, jingle all the way. Oh, what fun it is to ride in a one-horse open sleigh. Hey, jingle bells, jingle bells. Oh, what fun it is to ride in a one-horse open sleigh.
Enjoy a fabulous Christmas and an amazing New Year. See you in 2012.